This investment update is brought to you by Trobe Financial. Make your money work harder for you.
Hello, this is Chris Andrews from Trobe Financial. Have you wondered why home loan rates have been so low over the last year? Sure, official rates are at record lows, but that's not the full story. To understand what's happening, you need to go back to March last year, when markets were in a full-blown panic about the financial impacts of the coronavirus. The Reserve Bank was concerned that our banks and credit unions might stop lending altogether, with disastrous implications for economic activity and for employment. And so the Term Funding Facility, or TFF, was launched. The TFF allows banks to borrow money from the Reserve Bank for 3 years at 0.1%. That's the money funding those really cheap home loans that you've been seeing. And that's the money that has reduced the bank's need to issue bonds, which of course lowers the cost of the bonds that they have issued. So when it comes to funding costs, the TFF has been an enormous success. More than $140 billion has been borrowed, and the Reserve Bank is expecting a big rush from the banks before the TFF closes on 30 June. The question for borrowers is what happens after 30 June. Banks will no longer have the benefit of the cheap funding. They'll have to resume their normal funding programs, and they won't be getting money for 0.1%. Interest rates are still very low, but most observers expect that home loan rates will increase in the months ahead. This is Chris Andrews from Trobe Financial.
This investment update is brought to you by Trobe Financial. Make your money work harder for you.